Secrets of success. Unveiling the art of private company investment. These businesses, unlike their publicly traded counterparts, are not listed on stock exchanges, making them less accessible to the average investor. However, they also offer intriguing opportunities for those willing to dive into the world of venture capital and angel investing. This guide will help you navigate this less charted territory, from understanding the basics to finding your way into this exclusive club. Number 1. Understanding the term private company. A private company, often referred to as a privately held company or corporation, is an entity that is owned and operated by a select group of individuals or entities. They're not required to disclose financial information to the public, allowing them to maintain a higher level of privacy and control over operations. While they may have a limited number of shareholders, private companies are not subject to the same stringent reporting and regulatory requirements as publicly traded counterparts. This ownership structure provides more flexibility in decision-making, making it easier for the founders and stakeholders to steer the company's direction according to their vision and objectives. Private companies play a crucial role in various industries, from family-owned businesses to startups seeking funding from venture capitalists or angel investors. 2. The opportunities. People can make money from private companies through various avenues. Equity ownership enables investors to profit as the company's value increases, potentially resulting in capital appreciation or dividend payouts from profitable operations. Those providing loans or purchasing debt instruments earn interest income, while active participation in management or consulting services can yield fees or a share of profits. Royalty agreements tied to intellectual property generate income from licensing or product sales, and secondary market sales allow investors to cash out before exit events. Preferred stockholders may receive preferential treatment, and venture capitalists and angel investors hope to see substantial returns as startups flourish. Lastly, private equity investments in mature private companies may lead to profit through operational improvements and eventual sales. 3. Research and due diligence. Before you jump headfirst into it, thorough research and due diligence are paramount. This phase is where you separate the wheat from the chaff, identifying businesses with the most promising potential. It involves evaluating the company's financial health, market positioning, and the competency of its management team. Remember, unlike public companies, private businesses are less transparent, making your investigative skills very critical in this endeavor. You can actively search for private companies in industry reports, news articles, and online trading platforms. 4. Valuation. Determining the value of a private company is a critical step in the investment process. Unlike publicly traded companies with readily available stock prices, private company valuation can be more complex. Investors often use various methods, including the income, market, and asset-based approach, to assess a company's worth. The income approach calculates the company's value based on its future cash flows, while the market approach compares it to similar businesses that have been sold. The asset-based approach, on the other hand, evaluates the company's assets and liabilities. Understanding these valuation methods is essential to make informed investment decisions and ensure you're not overpaying for your stake. 5. Networking. Building a robust network in the world of private company is a strategy that should not be underestimated. Attending industry events, conferences, and local meetups can open doors to a wealth of opportunities. Personal connections forged in these settings can often lead to promising investment prospects. The business and entrepreneurial community is all about relationships, and being part of this network can provide you with valuable insights, tips, and access to early-stage companies seeking funding. So don't underestimate the power of networking. It can be a game-changer in your private company investment journey. 6. Angel groups and venture capital firms. If you're looking for a more structured approach to finding opportunities, consider this. Many regions have established angel investor networks that focus on funding startups and private companies. These groups provide a platform for individuals to pool their resources and expertise to support early-stage businesses. Joining such groups or connecting with venture capital firms can be advantageous, as they often have a pipeline of pre-vetted investment opportunities. You can benefit from the collective wisdom and due diligence these organizations bring to the table, making it a more guided path into the world of private company investments. Join our blog, BraylenAV.com, for access to expert tips, the latest updates, and a treasure trove of knowledge. Come along for the ride. We'll see you there. 7. Business contacts. This can be a goldmine. These contacts could include suppliers, customers or partners with insider knowledge of the industry. When someone you've worked with for years recommends an investment, it carries a level of trust that can be invaluable. Business contacts may introduce you to private companies in their network that are actively seeking investment. In these cases, you often have the advantage of a warm introduction, making it easier to initiate discussions and explore potential investments. Don't underestimate the power of your professional relationships. They can open doors to opportunities you might have never stumbled upon otherwise. 8. Negotiating terms and deal structure. Once you've identified a private company that piques your interest, the negotiation phase becomes critical. It's here that you'll define the terms and deal structure of your investment. This involves discussions on matters such as valuation, ownership stake, and the conditions of your involvement. Negotiating the right terms is an art, and it requires a deep understanding of the company, the market, and your own goals. Striking the balance between a fair deal for both parties is key to a successful investment. You'll want to ensure that your interests are aligned with those of the company, and the terms you agree upon should reflect your long-term objectives. Having a seasoned advisor or lawyer by your side during this process can be a wise move to make sure you're getting the best deal possible. 9. Funding options. Each option offers its unique benefits and considerations. Equity investments involve buying shares in the company, allowing you to share in its success and potentially receive dividends. Convertible debt and preferred stock offer hybrid financing methods, combining elements of debt and equity. Crowdfunding and online platforms have gained popularity, providing access to early-stage companies seeking investment from a broader pool of investors. The choice of funding option depends on your investment strategy, risk tolerance, and financial objectives. It's crucial to explore each avenue and select the one that aligns best with your goals and resources to make your private company investment journey a success. 10. Managing risks. Private company investments are inherently riskier than traditional ones, primarily due to their lack of liquidity and limited information availability. Diversification is a key strategy to mitigate these risks. By spreading your investments across different private companies or sectors, you can reduce the impact of a single company's poor performance. It's essential to be prepared for the possibility of losing your entire investment in some cases, so be cautious and never invest money you can't afford to lose. Moreover, understanding the company's financial health, industry dynamics, and potential challenges can help you make more informed investment decisions. Due diligence is your best friend in managing risks, so be thorough in your research and careful in your investment choices. 11. Ongoing involvement. Once you've committed your capital, you need to stay actively involved in monitoring the company's performance. This might involve attending shareholder meetings, reviewing financial reports, and maintaining open communication with the company's management. Being engaged allows you to identify any issues early on and be part of the decision-making process if necessary. You should also be prepared to provide expertise and support when needed, especially if you have a hands-on role in the company's development. Staying engaged ensures that your investment is on the right track and can lead to better outcomes in the long run. 12. Tax implications. Understanding the tax implications is crucial to optimizing your returns and complying with regulations. Private company investments may have tax consequences related to capital gains, dividends, or other income. Depending on your jurisdiction and the structure of your investment, you might be eligible for incentives or deductions. It's advisable to consult a tax advisor or accountant who specializes in private company investments to ensure that you're navigating the tax landscape effectively. Staying informed about the implications of your investments is not just about reducing your tax burden, but also maximizing the profitability of your private company portfolio. 13. Exit strategies. One crucial aspect of investing in private companies is to plan for exit strategies. These strategies are the roadmaps that guide you on how and when to cash in on your investments. Common exit strategies include IPOs, where the company goes public on a stock exchange, allowing you to sell your shares, often at a higher value. Mergers and acquisitions involve the company being bought by a larger corporation, resulting in a payout to investors. Secondary market sales provide another option where you sell your private company shares to other investors. Planning your exit strategy is as important as making the initial investment. It dictates how you'll realize the financial gains from your investments. 14. Professional advisors. Financial advisors, lawyers, and accountants who specialize in working with startups and private companies can be invaluable allies. They have the expertise to help you make decisions, from conducting due diligence on potential investments to ensuring compliance with relevant regulations. Moreover, these professionals often have extensive networks and can introduce you to investment opportunities that align with your financial goals. Their knowledge of the legal and financial intricacies of private company investments can save you from costly mistakes and provide a smoother path to investment success. If you're serious about investing in private companies, having these specialists in your corner is a wise move. They not only help you navigate the challenges, but can also connect you with businesses actively seeking funding. As we conclude our journey through the secrets of success in the world of private company investment, we hope you've gained valuable insights and strategies to embark on this unique and potentially lucrative financial path. Remember that private company investment isn't solely financial gain. It's also about participating in the growth and success of innovative businesses, shaping their future, and potentially being part of the next big success story. Whether you're looking to diversify your portfolio, support startups, or engage in long-term wealth building, understanding the intricacies of this exclusive realm is the key to your investment accomplishment. We encourage you to continue learning, seek opportunities, and embrace the challenges that come with this thrilling adventure. Your journey into the art of private company investment has just begun, and the potential for success is as limitless as your dedication and passion.